While Tesla's recent $2 billion fundraise may have briefly checked its soaring share price, which has nearly doubled in 2020, the electric car maker continues to steal the headlines, with many analysts suggesting that the shares are still a buy, with the possibility of the electric car maker crossing the $100 billion market cap milestone. Shares of Tesla were up nearly 37% in the first 3 weeks of 2020, and we're sitting at a $103 billion valuation, now at a staggering $400 billion. Could Tesla really be the first trillion-dollar car company? Toyota Motors is currently the world's most valuable car company at $233 billion market cap. But with Toyota's overall sales falling 2% in 2019 from the prior year, there's room for Tesla to pick up the slack. With the advent of the full self-driving vehicles and selling its proprietary software and battery technology to legacy automotive players that might have trouble catching up, together these factors could drive an immense amount of cash flow to help Tesla attain a goal of $1 trillion. With its tech, its expanding business model, its growing customer base, and now its nascent China business, Tesla has the catalysts in place to reach $500 billion, if not $1 trillion in market valuation within the next decade. Tesla's recent stock price rise might have come as a shock to many, but not to others who have believed in Tesla, sometimes for more than a decade. One of those strong Tesla bulls has been ARK Invest. ARK has always focused on the larger picture since its inception. So far, this has been the best way to consider Tesla's potential, in terms of sales expansion and apparently stock price as well. Tesla's value has grown as it has shown an ability to not only dramatically increase production and sales, while other automakers are shrinking, but the biggest potential to blow up in value is if Tesla can master full self-driving technology. ARK Invest expects Tesla shares to jump to around $7,000 by 2024. That could equate to a market value of around US $1.5 trillion. Making it more valuable than the current top stocks, Apple and Saudi Aramco. And there's a lot of Apple in the way Tesla proposes to manage its EV and batteries. However, it could go even far beyond that if Tesla nails autonomous driving. A fully autonomous taxi network could break the mold of a traditional automotive manufacturer's business model completely, ARK Invest says in its blog post. Potential futures in which Tesla nails self-driving tech include price targets of $15,000 to $22,000, while without nailing self-driving tech. ARK puts a 2024 price target of $3,400 on the company, which is still pretty impressive. ARK Invest isn't the only one with a strong bullish opinion of Tesla/TSLA. Well-known investor and billionaire Ron Barron, whose fund owns more than 1.6 million shares of Tesla, has long had a strongly positive view of Tesla's promise. In 2014, he said, "All of us will likely be Tesla customers in 25 years." In 2015, he was behind Elon Musk's vision of producing 500,000 cars a year in 2020. Tesla's market cap was $30 billion at the time, and he projected a market cap of about $120 billion by this year. The company's market cap is $135 billion. In 2017, Barron expected the company's stock price could reach $1,000 by that year. It did get to that, and presently now seating at $2,000. He also said the company may be the most interesting company he's ever invested in over his 46-year career. In 2018, Barron projected a 50-50 chance of Tesla pulling in $1 trillion in revenue in 2030. Unlike private companies, the value of any public company is meant to be easy to calculate. After all, it's governed by share price. That share price is carefully monitored by market analysts, who evaluate the trajectory of stock prices in order to gauge a company's general health. They recommend a buy or sell based on earning histories and price-to-earnings ratios, which signal whether a company's share price adequately reflects its earnings. All of this data aids analysts and investors in determining a company's long-term viability. But the decision-making behind what a company is actually worth is more visceral than numbers. In the case of Tesla, market insiders claim Musk has the Steve Jobs factor, with the company riding a wave of goodwill as eco-conscious customers turn to electric vehicles. More importantly, Tesla has a massive cult-like customer following and historically very little competition in the space. That is what is moving the dial in Tesla's favor, and that is likely to continue. Against the cult of Musk, other car manufacturers like General Motors, Ford, or VW, who have baggage in the petrol and diesel space, are finding it tough to compete. This influence of brand reputation, earning forecasts, and market appetite can easily overhype a company's valuation, and Tesla's $100 billion markup is a prime example of this, which was achieved making it the first publicly traded U.S. car maker to surpass that high mark, which also also made Tesla officially worth more than General Motors and Ford combined, despite both auto giants' century-long head start on Elon Musk's industry disruptor. Tesla Inc., TSLA, continues to polarize opinion. Idealists believe that it is so far ahead of the competition that rivals will struggle to catch up as the world moves to electric vehicles, with Musk's dream of potentially turning every Tesla with the appropriate software into a robotaxi, and his own dreams of building a huge fleet of robotaxis that will revolutionize the way we do road travel. Tesla will not become a trillion-dollar company selling cars or batteries, but they might do so selling transportation as a service. The Silicon Valley automaker's shares set a goal to comfortably sell more than 500,000 vehicles in 2020 after reporting quarterly results that handily topped consensus analyst expectations. For the fourth quarter, the company delivered 367,500 vehicles in 2019, up 50% from a year ago, in line with its guidance range of 360,000 to 400,000 vehicles. The cost of operating an electric car is lower than that for a combustion engine, and its mechanical life cycle might be millions of miles. There will likely be one dormant company in this field, and they will make huge amounts of money. Right now, Tesla seems to have battery production. Other manufacturers will be competing for the same batteries as they ramp up, experience with self-driving cars, and experience building electric cars. Other automakers are catching up. Google may have a better self-driving car program, but no other car company will have access to the volume of batteries that Tesla will have when their gigaplant ramps all the way up. Not everyone is convinced that Tesla has it right on full self-driving, but if it does, FSD, full self-driving, at Tesla is likely to happen at a fraction of the price of rivals such as Google, Apple, and others. That's the sort of advantage the most optimistic analysts are dialing into their valuations. And crucially, governments are on the move. The UK, with its Tory government, is fast-tracking the banning of sales of new diesel and petrol cars from 2040 to 2035, as it seeks to set an example ahead of the last chance global climate talks in Glasgow later this year. And for good measure. The Tories are going to ban conventional hybrids as well. Bang goes the business model of the only car company still worth more than Tesla, the Japanese giant Toyota. Tesla's stock has climbed nearly 220% in the past 6 months, including roughly 86.5% this year, while skeptics maintain their bearish stance, suggesting that the recent share price leap is not a reflection of the company's inherent value, but simply a technical rally exacerbated by computer trading. Know that investors betting against Tesla's stock have lost more than $8 billion since the beginning of the year, according to data from S3 Partners, including nearly $2.5 billion in losses on a surge alone. Ihor Desanuski, a short interest expert, reported that shorts gave up over 2 million shares over the last 30 days. The Tesla share price might rise and fall, but investors are just now starting to understand what the future might look like with the rules and bans about to be placed on CO2 emission vehicles. Tesla shares have climbed more than 10% and have rallied more than 180% over the past 3-month period, according to FactSet data. That performance far surpasses gains for the Dow Jones Industrial Average, DJIA, and the S&P 500 Index, SPX, which are up 4.9% and 6.9% respectively. The Nasdaq Composite Index, COMP, meanwhile, has climbed 4.1% in the month and 11.4% in the past 3 months. Tesla is now trading at a new high over $2,100 per share, and its overall market capitalization is near $400 billion. Earlier this month, Tesla announced a 5-for-1 stock split that sent the stock price surging. Surprisingly, it hasn't stopped rising since then. TSLA is now up 40% since announcing the stock split without any other major catalyst happening in the meantime. In comparison, Apple, who also announced a stock split 2 weeks before Tesla, has been up 20% since the announcement. Tesla's stock appears to be unstoppable over the last 3 months, again despite no major announcement. One of the possible reasons is a slow burn on short squeeze, as more short sellers are giving up on Tesla and now switching to long positions. For a long time, Tesla has been one of the most shorted stocks in the world, which means that investors are betting on the price going down by borrowing shares and hoping to buy them back at a lower price. Also, as Tesla's fleet grows, it will become a big business to supply the energy for it, and the company is addressing that directly with Tesla Energy. Right now, it doesn't mean much within Tesla's valuation, but it could contribute 20% to 40% of it by the end of the decade. Elon Musk has just done the impossible. Despite setting unrealistic production targets and butting heads with Wall Street, Tesla has surpassed their $100 billion, £76.3 billion mark, with $300 billion extra, and are now the most valuable car manufacturer in the world. And that is all we have for you today. Thank you for watching. Till next time.